Back with us on MidCap Radar, and now we are joined by the management of Puravankara, and the stock has surged more than 190% in 2024 so far. The stock has almost tripled in value. The company has acquired a 7.26 acre land parcel in Bengaluru's Hebagodi. The Bengaluru land parcel has a potential gross development value of 900 crore rupees. Now, to discuss this and more, we are being joined by Abhishek Kapoor, the Group CEO at Puravankara. Abhishek, good afternoon. Thank you so much for joining in. I'd like to first start off by asking you about this land parcels that you have acquired, first in Bengaluru and in Mumbai, or in Thane as well. Now, what is the total consideration that you have paid for these land parcels, and how are you planning to fund them?
Let me share with you. So we've closed a bunch of transactions between Mumbai and Bangalore. The total GDV we have added between all of this is over 7,000 crores. The last transaction which you spoke about, which is about 7.26 acres in Bangalore, plus about another 8 lakh square foot of landowner share that we have acquired in some of our ongoing projects in Goa as well as in Bangalore. The total GDV that we have added there is about 1,550 crores. Having said that, of course, you mentioned Thane. Thane, we have added about 12.75 acres with a GDV of about 4,000. And Lokhandwala, which we had announced a little while back, that is about 1,500 plus crores. So all in all, I think we've added about 7,000 crores of GDV. And our focus continues to be on new acquisitions while we continue our launches.
Okay. So coming back to the same question that my colleague asked, how will you be funding this? What is the total consideration? Because you had indicated you'll be adding around 7,700 crore rupees of gross development value with the new land buys. You're at 7,000 crore rupees. So will there be any more land buys here, and what does it do to your balance sheet?
See, definitely we will add further lands. This is about 7,000 crore GDV added. And our focus, as I mentioned, continues because last year, if you look at what we have done, we have sold about 7.36 million square foot, and we launched about 10 million square foot. This year, again, we are looking at least 10 million square foot to open for sale, about 14 million square foot of approvals. So again, what we need to really do is replenish our land bank and the land inventory. So therefore, the focus on BD and acquisition will continue. While we do that, from the balance sheet point of view, all our options are there. Whether it is debt, MES, internal accruals, of course. As you know, we collected over 3,600 crores. We are collecting at an average of about 900 plus crores on a quarter. So accruals, then of course, equity, and of course, platform transactions like we announced with HDFC some while back. So bunch of transactions that we can do. All options are open on the table for us, and we will try and maintain a very healthy debt to equity ratio.
Okay, so how much will you be spending on land acquisitions? Let me get more direct here, because that is a number which will be important to understand. Your debt increased this time around, but NCDs came down. You have approved QIP fundraise as well. There's the HDFC platform. So just to give us a sense of what will that split look like? What is the capex that you plan for land acquisitions? How much will you be spending in FY25, and how much has already been spent?
It will definitely be upwards of 2,500 crores. That's what we will look at deploying between all of these transactions. As you rightly mentioned, 1,150 of HDFC is already lined up. Bunch of other transactions are lined up, which will be mixed with, of course, our internal accruals. So overall, we will look at least 2,500 plus crores of deployment in this financial year.
So the QIP that is lined up, Abhishek, the 1,000 crore rupees that you guys plan on raising, have you guys had any conversations with institutional investors? What has the response been to that? And if you could share a timeline as to when do you look to raise these funds through the QIP, because your stock has done extremely well.
Hormuz, you know how this process works, so we can't at this point in time say more than what is there in the public domain. As I mentioned, all our options are open. Public markets are open. I mean, all the options are open for us for fundraise. And I'll be happy to share more information as we progress on it.
Okay, so we understand QIP is something that you've just approved, and there's no finality in terms of share price and other aspects of this fundraise as well. Let me go back to the balance sheet. As I said, NCD amount went down in the year gone by. Debt went up by 519 crore rupees, and interest cost on an average also went up from 80 to 100 crore rupees. Is this a number you will be comfortable with in FY25, or will we see more increase here?
We are very comfortable with the numbers that you just mentioned. The fact is that when we repaid the NCDs, we in fact lowered our cost of capital. And what we intend to do is how we measure our business is what is very important. How we look at it is of the total area under development, we should look at per square foot debt of less than 1,000 rupees. That's how we look at our performance and our debt ratios, because that gives you sufficient coverage both in terms of debt and interest. Because your average realization is say about 8,500 rupees a square foot, and your debt is at less than 1,000 rupees a square foot, and your average cost of interest or debt is about at 11%. Even if I assume 11%, it's about 110 rupees a square foot per annum. So overall, I think if as long as we remain in that range bound number, we should be all right. That is one. Secondly, our net debt numbers, we are very comfortable with them as of now, and it should hover around the similar number. But our debt equity ratio, our target is to keep it under 1. So that I think we will continue to endeavor. As the value of equity goes up, then that's a different conversation to be had. But having said that, we'll continue to watch for our debt per square foot numbers.
All right, Abhishek, we leave it at that. Thank you so much for joining in and sharing with us your thoughts on the road ahead for the company. That was the management of Pura One Kara there sharing with us their views. Time for a short break here on MidCap.